Ladies and gentlemen, thank you very much for having me and having the London Stock Exchange here with you tonight. I will be, of course, very brief. My name is Luca Peyrano, CEO of the Elite. Elite is a company of the London Stock Exchange whose mission is to support SMEs to innovate, grow up more quickly, and maybe raise capital in the future. As you probably know, raising capital for small companies and mid-sized companies is most of the time quite of an issue. But let me go back to the title of this intervention, whether Europe is leading or lagging behind in fintech. Probably even before answering this question, we should maybe ask why fintech is important to us and to our economies. And of course, it is important, and it will become even more in the future. Let's put this way, in a very simple way, fintech is finance enabled by technology. And there are two fields. One is potentially impacting consumers, of course, very important. The other one is impacting SMEs and more in general corporates. And again, like in a chain, consumers and savers and pensioners, everyone, every single person within our community. My field is the second one. I actually deal with companies, and I try to understand if and how we can support as an institutions companies to grow up and raise capital as a key factor for future success. Now, economies compete and will compete more and more on the ability to allow their SMEs, in the case of Europe, our SMEs, to access finance in an easier, cheaper, and more flexible way. This will be the competition for the next probably 10 to 20 years globally. Capital are global, SMEs are very local animals, and who will be in place to connect these two components of the economy will probably be better positioned to serve this ecosystem of job creation, innovation, growth, and so on and so forth. In our humble view, there are three factors that will impact this ability. One, of course, is culture, is the mindset, which is why we believe that an access to an ecosystem of advisory services is going to be very important. Even though it is going to be a soft element, it can be equally important to some of the aspects we might discuss in a few minutes. Regulation, of course, very important. Regulation is a key factor for making life easier for companies, and even fiscal regulation can be very important to reduce or rebalance the disadvantage of, for example, of equity with compared to bank financing. And finally, technology. Why technology is so important? Because new technologies can enable demand and offer of capital to matchmake in an easier way. This was not possible in the past. You should always, as a company, go through some gatekeepers, good or bad. That's not the occasion to debate this aspect. Take the example of banks or even other intermediaries, but that should necessity. With new technologies, you potentially can also allow companies to go straight to the capital source, investors, and vice versa. And that is going to be a crucial element in this revolution. And fintech is going to play a major role. Now, all these three factors, regulation, technology, and culture, now is all about removing barriers. We shouldn't necessarily add something new or revolutionize the way we think about making the connections between these two sides of the universe even richer. It's all about removing sometimes things that are already in place. And again, take the technology. Technology can remove some of the barriers between a company and an investor. And this will end up impacting the cost of raising capital, which is the cost of capital for companies. And if we are able to reduce this cost, equity might become a lot more competitive with respect to bank financing. Because when bank financing is simply too high, you have two basic long-term impact. One, you might have some imbalances. The recent crisis was predominantly caused by an excessive indebtedness in the corporate sector. And even more subtly, finance, which is debt financing, can impact the ability, the long-term ability to create innovation. Because debt financing is the enemy of risks in a way. And therefore, whatever can bring to a sufficient level of risk-taking, it can be R&D, it can be entering into a new market, whatever is not basically financing the working capital, can be financed by banks or pure short-term, low-risk instruments for providing funds to companies. This can only be equity. And this is an example. On the cultural side, we believe that Europe is actually lagging a little behind with respect, for example, to the US, where the idea of embracing risks is probably higher. But we have some long-term advantage compared to many other regions, which is why we believe that we might, back to the original question of the title of the intervention, we might not necessarily win the race for the next 100 meters, we might long-term win the marathon. And the reason are predominantly the following. First one, we sit on the largest economy at global level. Second, the richness and diversity of Europe as an industrial ecosystem is unique. Long history, very diverse, very vibrant. We not only need to inject some more energy and some more appetite for risk, but can unlock for the next 10 to 20 years an amazing growth and ability to innovate and to generate new jobs. And finally, not least, the capital market union, which at the London Stock Exchange we heavily support in a number of ways. But the capital market union is what might truly represent a revolution for Europe and for the way companies can access finance. We at Elite, very humbly, we believe that somehow we are recreating capital market union in action in our small environment. Today we have 500 companies from 25 European countries and even someone from outside of Europe, all of them SMEs, all of them with a view to join and start networking, understanding their future, and maybe raising capital in an alternative form. By accident, we also have tonight here with us one of our elite company, Facility Live, which will be, I think, the speakers next to me, and represent an exact example of what we are looking for when we try to support European SMEs to grow up and to look, think long term in terms of, again, growth and job creation. But we will continue supporting Capital Market Union. Hopefully we will continue gathering companies from Europe. May will be a very important month for Elite, as we will be getting approximately another 100 companies on Elite from approximately a dozen European countries. And therefore, again, in a small way, we hope to contribute to the formation of the Capital Market Union through this way. Thank you very much.
Thank you very much.